Good morning from London. My name is Dan Smith and I'm the Head of Research at AMT, which is a commodities broker and ring dealing member of the London Metal Exchange. So we're carrying on today with our regular video series, giving a 5 to 10 minute analyst briefing on recent trends in the base metal markets and looking ahead to key developments in the next week or so. So today I'm going to focus on the Chinese economy and also how copper has been impacted by the threat of Trump tariffs. And this follows on from last week when we focused more broadly on how the previous Trump presidency impacting key drivers of the base metals, including US equities, the US dollar, and also inflation. So in our previous videos, we talked about these five key drivers of base metals, so I'm not going to dwell on these today. But soon I'll be looking more closely at driver number 2, i.e. Chinese macro, and how the Chinese economy has been performing. And also driver number 3 and 4 for copper, so looking at how fundamentals are being impacted by the threat of extra US tariffs. So before we get into these topics, just a few slides highlighting how markets have been performing in the run-up to the second Trump presidency, which of course starts officially today. So our table here on the left shows the week-on-week trends, and while our charts show that, our charts show trends in the past 3 months. So what we can see clearly is that markets are in a pretty bullish mood. So US equities are up, global equities are up, even Chinese equities are up. So this all flags up a more supportive environment for the base metals. So in terms of economic data releases, there were a couple of highlights last week which helped encourage the bulls. So first up, we had Chinese exports. Let me just highlight it here. Hang on a minute. So we had the Chinese export data came out here for December, and we saw a growth of 10.7% actually. So better than the survey and better than previous. So significant acceleration there. Also, of course, we had US CPI inflation. So that came in at 2.9% for the headline number. But the core actually eased back. So this encouraged the idea that US inflation was under control, and it did help to take the US dollar lower. So looking ahead, the most significant data release will be this one here. So the Chinese PMI comes out on the 27th. But also, of course, one of the key drivers inevitably in the next week and next few weeks is going to be the Trump presidency. So he starts, of course, with his inauguration today at 5 o'clock UK time. And he's expected to start driving through many of his promises around energy and environmental policy, immigration and tariffs, of course. So watch out for all that. So now we look explicitly at the base metal trends. So given this bullish backdrop that I've just flagged up, it was no surprise to see that most of the base metals have rallied in the past week, as I show over here. So aluminium up by about 4%, nickel and zinc not too far behind. And then on the right hand side here we have how these markets have been doing so far this year. So what we've had really is aluminium, nickel and copper all up by about 5% so far this year, so fairly decent rally. This contrasts with something like zinc, which is actually down by 1% so far this year. So as I say, we'll be talking about copper in more detail shortly. So before we do that, the other key bullish thing has been that the Chinese economy has looked as though it is responding to government stimulus, and certainly the economy looks strong at first glance. So on Friday we had this kind of massive economic data, so giving numbers for Q4 in December. So there are a few kind of key highlights. So industrial production's clearly gathered momentum into December, stronger than expected. But also the key thing for base metals is these things like solar PV and electric vehicles. They actually accelerated slightly into December. So this is all quite bullish. But even things like construction, which previously were very, very weak over the summer, they're showing now more of a flattening trend. So there's less of a drag really from from construction at the moment. So cement, for example, which of course is used in construction, that's only down by 2% in December, and that's much better than where we were a few months ago. And then finally, the actual credit data, which I highlight here, was very, very strong actually. So total social finance was up by about 23% in December. And that, when you look at the seasonality of this, which is the key way to look at it, the average drop over the past 7 years was 12% roughly. So in other words, there's this big disconnect now between very strong credit growth in December and what we normally get, which is weakening credit growth into December. So far so good. But needless to say though, the Chinese economy faces a number of very serious structural challenges. So the foundations of growth are not particularly solid. So we had some numbers out last week, I think it was, which showed that the Chinese population is still in decline. And company profitability, of course, is pretty abysmal. So industrial profits down by 5% in the 11 months of last year. That was actually worse than the 10 months. So it's actually no sign of stability in terms of profitability. So it has to be said that the government's got quite a long way to go in terms of boosting consumer confidence. And the recent strength of the economy has also been driven by exports as well. So it has to be said that the recovery could easily be derailed. So overall, we think China looks bullish, but it has to be said that the risks are rather elevated, as they have been for a while. So in terms of trade wars, Donald Trump is of course promising to impose import tariffs. And here we're going to start looking at copper and how it's been reacting to these tariffs, or the threat of tariffs. So in case you missed it, on Friday we released our latest research piece on copper. And I'm going to talk very quickly about some of the highlights here now. So what we've got with this line chart here is we can see here that copper clearly outperformed its peers in the first half of last year, but in the second half clearly underperformed. So something like zinc and aluminium both did rather better. And but in the past couple of weeks, as I mentioned, copper's been regaining some strength. So it does look like things are getting a bit tighter for copper at the moment, and it's closing that price gap on its peers. So when Donald Trump was elected back in November, the threat of tariffs on copper became very real. And we see here that US prices on COMEX have actually soared this month, showing US tightness. And the arbitrage relative to the LME leapt up to nearly $600 here, or 6% of the LME of the copper price. So the new president has threatened tariffs of 10 to 20% on a range of goods, and Canada and Mexico are both being targeted. So in a way, this $600 or 6% arbitrage seems quite modest. So this kind of underreaction is really because the US gets the vast majority of its copper from places like Chile and Peru, and it seems that they're likely to avoid tariffs. So in other words, those places which are key suppliers are likely to dodge these high tariffs and may not be impacted at all. So that's why we end up with this underreaction really in terms of US prices. Also, it has to be said that in terms of the global impact, it's certainly true that the US needs more copper than it can produce, but it is definitely a very small consumer compared to somewhere like China. So we talk about that in the piece. So I think US is about 6% of world consumption, whereas China is about nearly 60%, so about 10 times as big. So I mentioned China, so that really is still the key driver in terms of fundamentals. So the other threatened impact's actually been on copper scrap imports from China, for China. So China typically gets about 20% of its copper scrap from the US. So you can imagine that traders are quite nervous about a potential trade war impacting those shipments. So what we've seen recently is we saw quite strong imports of copper scrap by China in the middle of last year, but that's been steadily fading as as last year developed. And that's really because of what I mentioned, that traders are rather nervous about the outlook. So Chinese smelters are definitely boosting output, but this is acting as a brake on growth for sure. So I'll whiz through this fairly quickly. So certainly the copper market looks very bullish despite the threat of tariffs. We don't think, though, that the tariffs will derail the strong economic backdrop. Chinese demand looks pretty strong into late December and early January. We do, of course, have the usual Chinese New Year. This year that will start on the 28th of January. So inevitably there will be a pause, but the underlying trend looks quite strong. Demand's been boosted by this green energy transition and extra spending by the state grid. But as I mentioned, the raw materials market for China looks very, very tight. So that's definitely limiting smelter growth in China. So on the other side of the coin, we've got fairly decent growth in terms of mining in the DRC, which is going to be seen through this year. So the copper market is probably going to be slightly oversupplied, and it also has to be said that US companies are outperforming the rest of the world, so that may encourage some US dollar strength. So that's all in terms of the my presentation, really. So again, take a look at our website here if you want to see our latest research. So here's our copper piece highlighted here. This is the Trump piece we sent out the week before. So all of this is on our website up here. So please do take a look. So that's all from me. Our disclaimer here. And thanks very much for your attention. And we'll be doing our next video again on Monday next week. Thank you all very much.